mixed news on the jobs front for the U.S. Labor Department, releasing that jobs report for the month of June. It showed U.S. employers added 222,000 jobs. That's the most in 4 months and was better than expected. Unemployment did tick up to 4.4%, and wage growth was a little bit disappointing. To talk about it, we want to welcome in Matt Roddy from Rockland Trust.
Thank you, Brian.
What's happening?
Not too much. I think that was a good jobs report overall. I would lean to the positive on that. I mean, they increased the April number. They increased the May number. More people went full-time. People moved from part-time to full-time in their jobs. Wage growth was good at 2.5%. It's not great, but I think it's some good signs there. I'd be positive on the overall numbers.
Okay, so assuming that's the case, and it seems like a good logical place to go. President Trump really says he wants a 4% growth economy. A lot of analysts say we're more 2 to 3% range. Does this open up the door for maybe a little bit of a more optimistic growth picture for the country?
I do think that. I mean, we were 1.5% or so, 1.4% in the first quarter. People are expecting 3% in the second. Before this number, I might have said that was a little aggressive. This number gives me some more confidence that a 3% growth rate in the second quarter is good, and we can get there. And I think the third quarter could be even shaping up even better because the corporate profits are really strong right now. We're in a good fundamental environment. We've got low interest rates, we've got good earnings, we've got excellent employment, I'd say, after today, and the Red Sox are in first place, so all's good.
All is well in the world, and the Celtics got the free agent they wanted. A couple things to tick through quickly. You did mention interest rates, but I don't want to get to that first. I want to talk about politics. You talked about the fundamentals, but how much are people in your world focusing on the politics right now? More
than ever, honestly. I've had more clients who have considered putting money on the sidelines, and I have to have that conversation with them. If you're going to put money on the sidelines, you got to be able to afford to do that. And what I mean by that is you're certainly not going to out-earn inflation. You're going to be losing ground to your long-term goals, so you got to be able to afford to take that money off the table. But people are doing it. People are more than ever trying to look around the corner, Brian. And, that's really hard to do, as you know. And,
right.
And I think you've got to focus on the fundamentals a little bit more than worrying about those things, because it doesn't always pan out the way you think on that market.
Well, the market did have a bad day yesterday, but generally speaking, it's hovering around the all-time highs. So basically, people are nervous about it taking a dip. But generally speaking, you don't see anything like 2008 and 2009 all over again.
I really don't. But I would tell people and my clients that, if you're not taking some of the money off the table from the equity side and putting a little bit away in the safe side, then you're making a mistake, because your risk profile is going up and up. After the run we've had,
right,
you have more in equities than ever probably, and you should dial back to where you were last
right,
year, maybe even 2 years, because I don't know if it's a late afternoon sun or if the sun is setting, but we're definitely later in the day as far as this rally goes.
And people need to understand, even if you don't invest anything, if the market goes up and you're heavily weighted in stocks, it's going to be more heavily weighted because they go up. We only have a couple more seconds here, but I did want to ask you about interest rates. Of course, the Fed probably will raise again. Inflation hasn't been a big issue, but what is your take on the impact on from real estate to loans to everything else?
Well, I think mortgage rates will be ticking up. They already have started to do that. They will take up some more. I think commercial real estate maybe have a little bit of a struggle going ahead, but I think overall rates should rise. The Fed has grounds to raise rates, to do their bond buying program. So, that'll be, if they go gradual, things will be fine.
All right, Matt Roddy, Rockland Trust.
Thank you,
listen, we're old buddies from Swampscott, Massachusetts, so Mrs. Roddy, he turned out okay. Back to you, Latoya.
You both